Okay, the number came in as negative 50.1 billion, so a little bit less of a trade deficit than last time, and the revision was negative 45.7 billion, so a little bit less of a trade deficit from last time as well. The stocks came in under a little bit of pressure, and they stay that way. The 10-year yield was 2.88. It stays that way as well. This number, it's kind of like the elephant in the room number. It's equal parts political as it is market moving. If it came in disastrous, you'd probably get people saying, well, yeah, we should expect things to get worse before they get better with this trade tussle going on. So it's going to be interesting how people spin it. But right now it had very little market moving effect. Back to you, Joe.
Yep, nothing so far anyway, Jim. Thanks, but we're still going to try. We're going to get something out of this data, and it's Steve Liesman's job to make some lemonade here. You got anything for Steve?
I got lemonade. I got an Arnold Palmer for you. Is that what it is? Or yeah, it's the lemonade. I know you like that.
Yep.
This is a pretty important number. I just want to kind of correct the way Jim talked about it. It's less of a trade. It's actually more of a trade deficit. In other words, it's 51 billion. That's the biggest trade deficit we've had since February. And there've been a lot of things that have been playing with this number. Going back to the hurricanes of last year, you had huge imports to replace stuff that had been ruined in the storms. Move along to recently, you had huge exports and imports, a lot of back and forth to get ahead of tariffs. The other thing you have is you have stronger U.S. growth. Guess what happens when you have stronger U.S. growth? The trade deficit goes up. In fact, I want to show you some numbers here, or a long-term track. People talked about the trade deficit getting worse. If you look at the history, look at it. Well, that's not the one I wanted to talk about first. I'm sorry, guys, if that was unclear in the back. But that looks at the trade deficit by country right there. You can see that Canada, we have a slight surplus with. Mexico and the European Union are all within a half a percentage point of U.S. GDP. That's the size of their trade deficit. If there's a problem, it's in China, which is, you could see a magnitude, 1, 2, 3, what would you call that, Jillian? 3 standard deviations higher than the other folks. If you were going to focus on a trade problem, if you see the deficit as a problem, you can see the other ones don't even matter relative to what's happening with China right there. And I don't want to show you the other chart if you guys have that available. There you go. Thank you very much. There's the trade deficit of percentage GDP. Becky, do you want to tell me what you see out of that chart there? This is not a Rorschach test.
It's moderating since 2015.
Right, right. And it's pretty flat is the idea. It hasn't gotten worse. The other thing you see those little bands there, those vertical bands? Mm-hmm. Those are recession bands. They tell you that the best possible way to improve our trade deficit is to have a recession. When the U.S. grows more strongly, as it did, say, in the pre-crisis period of 2008.
Why? We stopped buying imported stuff?
We stopped. There's 2 reasons why we buy imported stuff. We buy the inputs at a lower value, and we sell them for a higher value.
It's not worth calling for a recession.
No, it's not at all. I'm not calling. I'm making a facetious point here. We import sneakers for $3, and we sell them for $80. That's one way we make money. The other thing is we feel more wealthy, and so we import more stuff, which is a reason why a lot of people think the trade deficit, other than, and I don't mean to make light of this, the kind of local pain that happens when certain industries are hit badly by import competition, in the aggregate, why the trade deficit is not a problem. In fact, every time that we grow more strongly, we end up increasing the trade deficit. President Trump cannot have it both ways. He has stronger growth, and that's a fact, and that's an important fact, and
so
it's really
to squeeze the trade deficit while you're getting stronger growth. It's tougher and tougher to do.
Right. Now, I guess you can try to close off. I don't know if Jillian has a thought about this, but I guess you can try to close off the economy and try to do it all domestically, but that would not be the most efficient way to do it. If somebody makes something cheaper, you ought to buy it.